I am Troy McGuire, co-founder of FinTech TV, and Taking Stock starts now.
2 minutes to go here into the closing bell. Time to rock and roll on this Monday, April 13th. Welcome to the broadcast, one and all. You're watching Taking Stock, live from the trading floor of the New York Stock Exchange. I'm your host today, JD Durkin. Just a few moments away from the ringing of the closing bell down here on the trading floor of the big board. We got the team from Diversified Energy. They are standing by in celebration of 25 years. Don't call it a comeback, but it is quite the relief rally here on Wall Street. Despite all the major market indexes opening after the opening auction in negative territory, they are storming back in no uncertain terms with just over a minute to go until the closing bell. The S&P 500 is now somehow up a full percent. The Dow, which is being weighed down by shares of Goldman Sachs, a little bit of a disappointing earnings call for the big bank to kick off earnings season. It is the most weighted name in the Dow, but still the Dow overall doing pretty well at this hour, up about 0.5%. The New York Stock Exchange Composite Index in positive territory. Let's call it 0.9%. And as to be expected, the Russell 2000, the small cap stocks, the best of the bunch, up 1.5%. Tech, financials, and telecom, those are your strongest performing sectors in the S&P 500. For today's much more of a risk-on trade to kick off the trading week, utilities, staples, and energy stocks are your S&P 500 laggards. Salesforce, Microsoft, IBM, your strongest names in the Dow. Goldman, as we said there a moment ago, Coca-Cola and Merck are your Dow laggards. Diversified Energy here for the close. We'll pick up the rest of Taking Stock right after this. There we go. Look at that, everyone. Look at all the green on the bid board. You all made that happen today. That's absolutely awesome. Your final tail of the tape on this Monday, April 13th. It is tax week across America. The S&P 500 up a full percent. The Dow up 0.6. The NYSE Composite Index in positive territory at this hour, 0.9%. And how about the small caps? The Russell 2000 up 1.5. Also catching a bid to kick off the trading week, the fintech stocks with a strong outperformance on the tape led by Affirm. The home builders led by Hovnanian. How about the software bounce back? Cloudflare, MongoDB, a handful of others that have been very badly battered down the last few weeks, having a nice bounce back session as investors await to see what the timeline and further developments are out of the White House and the ongoing conflict in the Middle East. Let's bring in our first guest for the broadcast. Nancy Daoud is private wealth advisor at Ameriprise Financial. It is really nice to have you here. Thank you for joining us.
Thank you for having me. It's good to be here.
So listen, I mean, we start to prepare the show earlier in the day. We think that the tape is going to tell us one story, and it didn't look like it was going to be a very great day on Wall Street, but here we are, right after the closing bell, up a full percent. What do you see more broadly across these markets, Nancy?
Well, I think it's a very, very topsy-turvy time. Obviously, everyone has got the jitters because of this war, but I think the most important message that we tell our clients all the time is that you've got to just hang in, and this too will pass. It will pass. There will be an end. We just don't know when that end will come, but it will happen. And I think one of the best examples that we give was last Wednesday when the market shot way up. And for those people who get jittery and want to get out, if you did get out and you missed that one day, it would take almost a decade to recoup that. And so the message is stay the course and hang on. It will be okay. I think we see a very nice broad market. We're looking for Q1 earnings to be pretty strong.
Yeah.
And we just have to wait and see. It is very, very unnerving and certainly a lot of uncertainty.
I'll ask you a bit more about earnings in just a bit, but more broadly, can you talk to me about the other top questions that your clients are asking you about? I'm sure there's no shortage of interest to kind of chase the proverbial shiny thing. They hear this story, they see that story. It's all in the backdrop of a lot of uncertainty. What do they want to know about this market?
I think they want to know that they will be okay, that if they're accumulating, that they have the time frame correctly, if they're retirees and they're receiving income, that their next paycheck is going to be solid. There will be no disruptions in that. It's pretty simplistic. And so that's our job really, is to make sure that everybody feels comfortable. And the advice is, if you are in withdrawal mode, you should have at least 3 years worth of your income sitting in cash or in money markets at this point. It should not be in this crazy market.
There you go, some news you could use for those of you at home looking for potential portfolio positioning changes. The importance of earnings season. You and I, happy earnings season, by the way. Here we are, we had Goldman Sachs really kick us off today. We'll get a look under the hood at a lot of the other big banks, the big financial players, names like Netflix and Pepsi, some consumer brands in the days ahead. How important, you think, is this particular earnings season on the backdrop of everything else?
I think it is very important, but it's always about expectations. The expectations that earnings will be very strong. If they come in just slightly short of very strong, markets will react. So it really is all about expectations. Unfortunately, it's very, very emotional, but everything reverts to the mean within a week or so after the numbers are evaluated. But we do expect Q1 earnings to be very strong. There's no reason why they shouldn't be.
Any overlooked sectors or parts of the market that you're paying a bit more attention to, you think the average investor might benefit from also paying a bit more attention to?
I think the broader market is looking very nice. It used to be all about tech stocks, not anymore. We're very happy about having a more diversified market because it broadens the outlook. We're not relying on a handful of stocks to bring us home, so to speak. And so it's very, very good to see that there's a broadening of the market, and certainly the AI sector is really leading. And that's very, very exciting. I think that once this war is over, we are very optimistic about a boom.
Sure.
But I can't predict that, of course.
Yeah, at least on the tech side, it's no longer just those Mag 7 stocks doing the heavy lifting. They
Right.
still are up there. They're consolidated. It'll be a fascinating earnings few weeks ahead. Nancy Daoud, private wealth advisor at Ameriprise Financial. Thanks a lot for joining us. It's really nice to have you.
Thank you for having me.
Please come back on the show anytime. Skylar will grab your microphone. Jeff, you and I will head this way right as the crowd crushes in. Pardon me, can I squeeze through?
Absolutely.
Thank you very much. We'll bring you the top analyst calls that move the tape on Wall Street today. First up, Jefferies upgrading Starbucks to a hold. They say the U.S. market outlook for the coffee giant is stabilizing. Starbucks shares up 15% from the start of 2026. Next up, KeyBank upgrading T-Mobile to overweight from sector weight. They say at these levels, the stock is relatively cheap, citing a favorable balance sheet and network positioning. Finally, we got to talk Netflix because they report later on this week. TD Cowen reiterating the company as a buy, saying we're bullish ahead of Thursday's report. Has been in a nice uptrend the last 2 to 3 weeks. We get the latest numbers out of NFLX. That's the ticker symbol for Netflix, of course, this coming Thursday after the closing bell. Jeff, let's take a look at two notables here. We got to start with Blackstone. Look at that print, 6% on the day. Oppenheimer upgrading the firm to outperform this morning. They call the stock very attractive, setting with it a whole new price target of $154. That's upside potential off these levels of about 28%. We get the quarterly results for BX later on this month on April 23rd. And we'll take a look at shares here at beleaguered Nike. This is NKE. It is up on the day, but HSBC downgrading the stock today to a hold from a buy. They are saying what a lot of other people on Wall Street are saying. This turnaround is going slower than anticipated. Split adjusted, this stock is now trading back where it was all the way back in October of 2014. Not October of 2024, October of 2014, now down 37% as of February 20th to now alone. Now we'll bring you the latest from Anna Mello, longtime curator and historian here at the New York Stock Exchange, all about the history of the iconic NYSE sounding block. Take a look.
A distinctive sound can elicit strong memories that last for hours or even a lifetime. Those following finance with their ear to the ground will readily recognize the sound of a tolling bell and a gavel strike as representing the close of global capital markets, a soundscape unique to the New York Stock Exchange. The New York Stock Exchange has been striking a gavel at the close of trading since 1817, first to signify the end of trading one single security, and today signifying the end of the entire trading day. Countless gavels have struck this exact same sounding block since 1890, which is before women had the vote, before the first manned flight, and even before sliced bread. This sounding block has witnessed countless stories, and here are just a few. The sounding block began its career during the Second Industrial Revolution. Steam power fueled progress. Railroads and canals connected the country, and Edison's light bulb filled America with a warm electric glow. Originally, from its perch upon the bell podium, the sounding block oversaw a seething mass of humanity in swallowtail coats and stovepipe hats, belting out the cacophonous din of open outcry trading. As the steam age raced ahead, heavy industries like railroads raced to list their securities, brokers raced to meet demand, and the New York Stock Exchange's first permanent home raced towards obsolescence. To make way for both broker and technology, the New York Stock Exchange's first permanent home was demolished in 1901 in order to make room for its current home. As brokers shed their Victorian garb in favor of double-breasted sports coats and bowler hats, the New York Stock Exchange christened its new home on April 22nd of 1903. The sounding block was placed upon the freshly hewn marble of the bell podium, where it has remained ever since. A decade later, World War I sent global financial markets spiraling into a panic. All foreign markets had closed as of July 30th of 1914, and the New York Stock Exchange quickly followed suit, closing the next day and beginning our longest ever closure. When America entered World War II 23 years later, the sounding block witnessed an even greater seismic shift. With nearly 1,000 members of the trading floor community off fighting for democracy, trading floor jobs were filled by women for the first time, starting in 1943. Those soldiers lucky enough to return came back to an America well equipped for growth, as increasing consumer demand, surging product development, and ample disposable income generated an economic boom and a bull market that lasted for 8 years. 2 decades later, the sounding block had a box seat view to the upheaval of the 1960s. As men shed their wool suits in favor of synthetic fabrics, the New York Stock Exchange shed its status as an all-boys club. Active in the securities industry since 1954, Muriel Siebert was attracted by the egalitarian nature of the trading floor, where a broker's compensation was determined by ability and not by gender. On December 28th of 1967, Siebert was admitted as the first woman to own a seat on the New York Stock Exchange. 3 years later, another barrier fell when Joseph Searles II became the exchange's first black member. Even before joining the New York Stock Exchange on February 12th of 1970, Searles had enjoyed an impressive career, playing professional football for the New York Giants, as well as acting as an aide to New York City Mayor John Lindsay. At the dawn of the information age, stock trading had remained mostly unchanged since the sounding block began its career in the 1890s. Each auction was held verbally, and to an outside observer, the floor appeared completely unaltered between 1929 and 1979. But in 1979, the view changed dramatically, with the installation of over 15,000 pounds of computer equipment, all supported by a massive superstructure at the top of the trading floor. The personnel working beneath continued to change their look with the times, swapping out their patterned polyester suits as the CRTs around them changed to flat screens. Today, the New York Stock Exchange runs the last stock trading floor, utilizing a hybrid trading model unique among its peers, utilizing electronic trading technology in tandem with the human element. And with an active trading floor, the sounding block remains in use and is struck at the end of every trading day. Without a pen, a sheet of paper would remain blank. Without nails, a house would fall to the ground. And without a sounding block, the strike of a gavel would be inaudible. This humble object has been struck at every closing ceremony for over 100 years, loyally serving one single purpose: to shepherd the global capital markets, the New York Stock Exchange.
Welcome back to the show. You are watching Taking Stock live from the trading floor of the New York Stock Exchange. And now time for one of our favorite guests here on the show, the great Andy Bayer, a name and face you know and love, but a man with a different title, Managing Director of Asset Management at GSR. Thanks for being here as always. Congrats on the new gig. We'll talk more about it in just a sec. Nice to see you.
Yep.
So you and I were just looking at the final tape into the 4 o'clock close. Big rally for equities. What are you seeing for the crypto majors? Interesting action.
Yeah, we're right at the top of that range where Bitcoin has held ever since that February 5th kind of deleveraging moment, right? We've been from the mid-60s up to the mid-70s. Every rally has failed. There's been selling pressure up there. We've kept this ambivalent market going for about 8 weeks now. So we're right at the top, and given what I was seeing while I was watching the Masters yesterday and watching the S&P 500 futures trade on Hyperliquid down 200 handles, It's I wouldn't have guessed, right? So would have gotten that wrong. So it's a very strong day for both Ether and Solana as well as Bitcoin.
I love that. So you got Rory McIlroy hitting a bogey, but he
Yeah.
still held on at the 18th hole. He hits
That's
5
right.
on the 18th hole, and you got your Hyperliquid screen over there. You and I
Correct.
have talked about Bitcoin correlation a long time. What are you seeing right now with regards to BTC decoupling from tech on this backdrop of a lot of geopolitical concerns?
We've kind of always felt that eventually the market would start to decouple with Bitcoin functioning as a macro asset, really the quality asset within crypto. The thing that you kind of swim back to if you want to be in crypto, but you want to de-risk. Whereas the layer one blockchains like Ether and Solana, right, they'll power higher when the mood turns more towards growth. And that's how we like to think about this portfolio allocation question, right? You want to kind of swim back to Bitcoin when you're a little bit nervous about the market, and lean into those layer ones when you feel like the market has a bit more energy. When you hear about this news about tokenization and stable coins, all of those things have to settle to layer one blockchains. Bitcoin really doesn't have a lot to do with it. It's really about Ether and Solana. So they've been leading rallies up, but they've also been drawing down as much more. So Bitcoin is your safe haven, and Ether and Solana are your growth assets.
Can I get your take on this Morgan Stanley ETF news? Seen a lot of headlines. Undoubtedly, our viewers have seen a lot of headlines the last few days. Give us some context about what this moment really means for the broader adoption in the industry.
Absolutely. Well, first of all, my former employer, CoinDesk, won the benchmark mandate for that, so I was very happy for those guys that the CoinDesk Bitcoin price will benchmark that product. I think it's actually entering the market with a very different objective in mind, right? It's not going to try to trade more options or more shares than the BlackRock product. It's an allocation product. It's going to sit in portfolios for a long time. That's what excites me the most about it. This is really a strong sign from one of the biggest wealth management and investment management platforms on the planet that they're going to allocate into these things for buy and hold. This is not crypto as a trading asset class, but crypto as a long-term allocation asset class. Nothing could make me happier.
For anyone watching who might be a bit unfamiliar with GSR more broadly, what is the company all about? And talk to us a bit about your new role and your top priorities
I
there.
couldn't be more excited. I've been following this company for a long time, and actually some of the people who joined GSR 5-6 years ago are the ones who really influenced me into getting into this industry, this exciting industry. GSR started in 2013. When new coins wanted to ICO, wanted to come to market, they needed market-making services. Maybe some of you have heard of XRP and Ripple, right? That was GSR's first client. And when they came to market and their token listed, GSR was their first market maker. And since then, GSR has built this reputation as a very high service, high quality market maker for early stage tokens. Since then, it's added OTC businesses, a big venture portfolio, and is really well known around the space. And now, with all that attention and all that good client goodwill, they said, you know what, let's get into asset management, and I'm delighted to be leading that effort.
Andy Baer, longtime friend of ours here at the New York Stock Exchange and on the show now of GSR. Congratulations, my man. Very well deserved. They're lucky to have you.
Thanks, JD.
Come back and see us anytime. Don't go anywhere. A whole lot more Taking Stock coming up live from the big board right after this. Hey now, welcome back to the show. Time at this hour for a few headlines in the world of fintech, crypto, and artificial intelligence for your Monday afternoon. First up, the crypto majors all in positive territory, about 3% or so. Bitcoin holding on to 73,109 at this hour. Next up, crypto funds pulling in more than $1 billion last week alone, led by Bitcoin products. It is the single biggest inflow since January, and it signals growing risk appetite in the broader ecosystem. Finally, the Wall Street Journal first to report AI demand is outstripping available computing power, triggering outages, usage limits, and product delays. All this coming as companies very much struggle at times to keep up. Money 2020 Scarlett Sieber is now back to explain all of the ways that fintech companies actually make money. Take a look.
Welcome back. I'm Scarlett Sieber with Money 2020, and this is how fintech companies actually make money, where AI for finance stops being a buzzword and starts being an actual revenue model. Today's company, 9fin, quietly changing how the most expensive decisions in finance get made. 9fin sells AI-approved intelligence for credit and debt markets. Banks, funds, law firms, and advisors rely on it for price risk, analyze deals, and monitor markets where mistakes cost millions. How does 9fin actually make that money, though? First, enterprise subscriptions. This is a classic B2B SaaS business, right? Recurring, predictable, and high margin. Second, tiered pricing based on market coverage, analytics depth, and product access. Third, seat expansion as firms roll the platform out across teams. And fourth, data compounding, where proprietary datasets continuously improve the product. So what makes 9fin special isn't the dashboard, it's where it sits. The product lives inside pricing committees, deal execution, and risk conversations. That's expensive attention. Let's do a momentum check here for a second. In Q1 of 22, 9fin Series C officially put it in the category of fintech serving the most demanding customers in the industry. Institutions who happily pay because getting this wrong is far more costly than the software itself. So where is their moat? Proprietary data plus workflow lock-in. Once teams build decisions around a platform, switching becomes operationally painful. And that, my friends, is how 9fin actually makes money. Not by chasing eyeballs, but by sitting exactly where financial risk gets priced. When the decisions are high stakes, the software tends to be very well paid. Have a company that you want us to feature? Drop it in the comments below, and it just might make the cut. In the meantime, back over to you.
Welcome back to the show. You're watching Taking Stock. Our third guest joins us now live down here on the trading floor of the New York Stock Exchange. Say hello to Rusty Hutson Jr. He is co-founder and CEO of Diversified Energy. Not just a great guest to talk to, but a guest who just rang the closing bell. It's nice to see you here. Thanks for joining us.
Yeah, thank you very much.
What was the experience like for you and your teams to be down here on the trading floor, and what was this in celebration for, Rusty?
Well, it's surreal to be able to be part of that end of day experience with all of our employees. But we're commemorating our 25th year anniversary, but also the fact that we've now moved our primary listing from London to the United States.
That's awesome, and congratulations on doing so. Talk to us a bit more broadly about the business at Diversify. We're talking a lot about oil and gas. We're talking a lot more about diesel and jet fuel, obviously, than we ever have. The emphasis on energy right now is higher than I've ever seen in my career covering Wall Street. What does that mean for a firm like yours?
Well, we're a producer. So we're taking wells that are already in existence, and that's what we focus our time and attention on, operating those existing wells, doing them better than the previous owners, enhancing production, keeping those wells in production longer because we need it as a country. We need the energy supply. I mean, if nothing else, over the last 3 weeks, we figured out how important energy is to our country. And we're now, energy independent. I mean, we not only produce what we need as a country for ourselves, but we're exporting to our friends and allies across the globe. So it's very, very important that we continue to do what we're doing.
How important are the geographics? You and I were talking before that you were dual listed briefly between here in New York as well as London, but how about where the actual work itself is being done here in the U.S.?
Yeah, so we're in the Appalachian Basin, which is in the Northeast, and we're also in Texas and Louisiana and Oklahoma. So we're 13 states, producing, we're one of the top 20 producers from a natural gas perspective.
That's awesome. What have you been able to do as a publicly traded energy company that you could not do earlier in the company's history before you hit the public markets?
Well, it's all about growth, being able to grow the business and access pools of capital that, as a private company, you just don't have access to. And so we've been able to scale the business substantially over the last 8 years as a public company that we would never have been able to do otherwise.
And I'm hoping you're willing to talk to me a bit more. How do you position across these current events landscape, the geopolitical uncertainty that undoubtedly impacts your day-to-day operations in ways that the rest of us probably couldn't even really very much imagine? How are you positioned, and how are you and your team going across, taking in information every day to be smarter about the decisions you have to make?
Well, it's tough because it changes every day. I mean, tweets come out every morning, and you just never know what you're going to be facing. But it's really, developing a very strong business model, using hedging to make sure that we're securing prices that we need to be successful in the commodities that we produce, and really just focusing the business on cash flow. At the end of the day, cash flow is king, and so keeping our cash flows in a positive perspective and being able to continue to produce the energy we need as a country.
The ticker symbol is DEC. The company, Diversified Energy, the listing exchange, the New York Stock Exchange. Rusty Hutson Jr., co-founder and CEO. Congratulations. Thanks for joining me here on the broadcast as well. It's nice to see you.
Thank you. Appreciate it.
Don't go anywhere. A lot more Taking Stock coming up from the big board right after this. Welcome back to the show. Tomorrow here on Wall Street. Forget tomorrow on Wall Street. Today is the birthday of our very own Mel Montanez, booking producer extraordinaire here on Taking Stock. We absolutely love Mel. We adore working with her. She was my booking producer many years ago back at Cheddar. She is still part of the New York Stock Exchange family. This show is impossible without Mel. Hope you have an amazing birthday. As for tomorrow on Wall Street, might as well briefly mention we do have quarterly results in the morning from JP Morgan, BlackRock, Citigroup, Johnson & Johnson, as well as Wells Fargo. That and much more on tomorrow's edition of Taking Stock. Thanks for watching today's. We'll see you again tomorrow.